Welcome to a new update in this very boring market. But we're going to discuss why next week will be a decider for Bitcoin, as Bitcoin is still hovering within that range, and therefore you have to check this update, so stay tuned. But before we continue, make sure to hit that like button, subscribe beneath, and also check out our action we have with Bybit as we partnered up. If you want to join our membership for 1 month for free, just register to Bybit through our affiliate link, deposit $100 and you're able to join our premium membership. If you deposit $1,000, you're getting $100 for free on your Bybit account. So make sure to hit that link. Also, make sure to follow me on Twitter and Instagram, as on Monday we'll be going live and on Thursday as well. And next week, Monday, we even got a macro bootcamp, which you can check on Twitter. Now, when we're looking at the markets are very boring at this point. We're still hovering around 19k to 20k. Altcoins are slightly selling off. The only one that is showing some strength from the bigger altcoins is ETH. ETH looks ready to break to the upside, as if you look at the ETH Bitcoin pair, and also some specific altcoins like Quant, APT, they're showing some volatility. But unless that, we don't have that much to talk about. But it's going to change, as this week we didn't have any macro events taking place at all. Well, in the next two weeks, we're going to have that period that we're going to have the decider of which way we're going to go with the market. So either we're going to break to the downside or we're going to break to the upside, and all is going to happen within the next 1 to 2 weeks based on all the macro events which are going to take place. So that's why in the coming 2 weeks, Bitcoin will be breaking out based from that expectation, or based from that assumption, and based from the fact that we got a ton of macro and stock related events taking place during the next week. Also, we've seen that Bitcoin is remaining relatively strong, and I think that most of you will say that it's relatively weak. Why would you say it's weak? Because it's just consolidating sideways while the stocks are showing a bit more strength. But it's staying relatively sideways in a period where the dollar continues to show strength, and the dollar is also remaining flat, but the yields on government bonds are going up through the roof. So right now we are in a state of mind where the expectations for the federal funds rate is above 5%. We are even reaching 5.1. For your perspective, what does that mean? When Powell is speaking, he's saying what the federal funds rate is going to be that they are working with. So they expect it to be 4.45 for this quarter, and for next year 4.65. And based on that, you will see that he's hiking the interest rates, and therefore markets react in a negative manner, especially if we use quantitative tightening, because borrowing money becomes more expensive. So that's why the economy slows down, etc. Now, the federal funds rate is on 5.1, which means that next session we got a new hike announcement, which is probably going to be 75 bips. In December, another 50 bips, and then we get towards 4.45. He also said that in 2023 we remain flat, and most likely are going to add another hike of 25 bips to 50 bips, and then get towards that stage of 4.65. The fact that we are at 5.1 right now measures that the market is adding above the 75, 50 and another 50 to 75 bips of hikes to be happening while we are into peak inflation. So to be concluding, it's very strong of Bitcoin to actually remain silent here, remain going sideways, despite the fact that the markets are so weak right now and people are extremely feared at this point. So what is going to happen in the next few weeks, and what do we see in the data? Let's get towards the important events of the coming week. So when you want to talk about the important events, there is a website called Forex Factory, and it shows you everything. Yesterday we've had one important one, which was the Philly Fed Manufacturing Index, which I discussed on Monday with the New York one. Negative, which means that the sentiment is switching towards a negative number. Also, the existing home sales were dropping to levels not seen since 2008, as we have been dropping 23% in sales from 1 year ago towards now. So the data is getting there with terrible numbers, despite that we still see the yields going up. Therefore, it's important to check out next week. And what is going to bring next week? everything that you need if you like the markets. So on Monday we kick off 9:50 a.m. PMI numbers from Europe, France, Germany, Europe, Great Britain, all coming in the morning. And then during the afternoon we got the US. And then as an actual dessert, we even got Yellen speaking on Monday as well. So probably here we're going to get a fast reaction on the yields, and we're going to get a fast reaction on the markets as well. Then on Tuesday, we got consumer confidence, not too much. Most important on Tuesday is earnings. I'll come to that in a little bit. Wednesday, we got GDP from China coming in, and we also got new home sales from the US kicking in. Going to be a big day with those data coming in because China is releasing the data. And then on Thursday, we get the ECB speaking. We get the statements from them regarding their monetary policy. We got the GDP from the US, which is going to be important because it will be the third quarter in a row that we're going to be negative. And it's the advance, which is the first number of Q3. And it's always the most important and influent one. So Thursday is going to be big, also with the rest of the data kicking in, but GDP is going to be a big one. And then on Friday, the final key trigger for the Fed to make their decisions on, it's PCE that's coming in on Friday. So if that is going to be dropping, it's going to give a signal towards the markets that we are reducing the inflation, and then most likely we have a big impact again. And also on Friday we got the Japanese bank speaking and releasing their monetary policy. So everything is within those 5 days. So every day there's something big going to happen. And now the question is, how will that influence the markets? Big time. PCE will do. The ECB will do with the presentation. The GDP from the US will do. The China numbers are maybe going to do it less, but it's going to be important. Then on Monday, the PMIs are going to be a big trigger. Yellen speaking is going to be a big trigger. And then we also have the data from the earnings, which is still going to happen next week. FinFish is the one to look for. There you can use Screener. You tick in the ticker of the actual company. And then on the bottom, you can see the actual earnings date. And for Microsoft, it is on Tuesday after market close. If we go towards Google, it's the another big one. It's on the exact same day. So those are going to be key on Tuesday. And then on Thursday, when we also get GDP numbers, we are also going to get Apple and Amazon after market close as a big decider for what the indices are going to do. So next week is going to be that week. And the week after next week, we got Fed speaking. So it is going to be the period to be focused on the markets, and it's going to be the period to actually build your positions, because right now we are getting to the cutting edge of the policy, and investors are even pricing in more hikes than what we are expecting, as the yields are running up like no tomorrow. The 10-year yields on the US have been hitting 4.24%, have been running from approximately 1% since last year towards 4% right now, and even 2 years have been running swiftly from 0.25% towards 4.6%. So this is most likely going to have a turnaround within the next few weeks. And when we turn around with the yields, it's going to have an impact on risk on, and especially Bitcoin will do relatively well. So today we are seeing that we are still making new highs. It's decisive how the week is going to end. If we drop a little bit, okay, it's not too special, but I think that from next week on, the data is definitely going to bring all the information that you need when it comes to the market. So when we're looking at Bitcoin, we were saying that 19.6 is the crucial one that we have to look for. 19.6 has to break. If we flip 19.6, it is a trigger of longs towards 20.7 and 22.1. If that doesn't happen, I was looking for longs around 19.2. Terrible analysis, so I got stopped out. Second long area around 19k got hit, so we're still into that long. This is the long region, and then also around 18.4 again, but that is less confident. You clearly want to make a higher low here. If we continue to do so and the yields are going to fall, we most likely are going to climb to the upside, and then the breaker of 19.6 will bring what we need, which means a run towards 22.4. So in this case, the long theory still stands. If we do have a break beneath 19k and bounce from 18.5, 18.8 is going to be a short trigger, and then we're going to take the lows of 17.6. So then I'm assuming that high 16 or low 17 is the actual bottom going to be. And then you definitely want to go crazy long in that range. Ultimately, breaking and flipping 19.3 will cost the 19.6 theory as well. So right now, not too much for short. Longs are quite clear. If we get into these regions, then you can look for scalp shorts. But overall, the thesis stands. So next week is the one to go forward with. Probably will be jumping into live streams a bit more to cover all the news that's happening. Make sure to hit that like button and subscribe to this YouTube channel. Hit those longs, I think, especially if you want to invest. Make sure to check me out next week and have a wonderful day. Ciao.